There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Futures are up this morning after the Dow closed at another all-time high yesterday. Investors are awaiting the release of the Fed's minutes. Could Big Ben paint a different picture from the latest weak jobs report? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after stocks continued their run yesterday. The Dow closed at another record all-time high, but the S&P closed just 8 points shy of its all-time high. So do you think today we'll get above it?
I think it's going to try, and we're opening a pebble stone away. I think yesterday in the afternoon it made an attempt, but considering the travel range that we saw from Friday's low, it just was difficult. You know, Friday we came in, you had the dismal jobs report. People didn't know whether we would correct or whether or not it would be status quo. And you look here at the chart of the S&P and you will see that, you know, here is when we started this move lower. This was your engulfing bar. We talk about accelerated trends. This is when this one broke to the downside, but what a coinky dink. It held again. It held big support going to the left, held this trend line, same way it did pretty much here. Okay, when it broke its accelerated trend line, it held lower, came up to resistance, you know, consolidated, then went. So here we are at the highs. I think if we continue to stay above this 1560, you know, at some point it's going to be taken out. And then the hopes that the bears had of this head and shoulders top pattern that could have been formed for a bigger correction, I think will be negated. So at this particular point, you know, people are just, you know, shouldn't be all in from the long side, shouldn't be all in from the short side, and not be so concerned on headlines unless they're really participating, because even though we have historic highs in the Dow or the S&P is about to, every stock hasn't been created equal. So it's been really, you know, an entries and exits market where it's been very stock specific.
Well, I know you just said we shouldn't focus too much on the headlines, but we do have the Fed minutes out later today. And of course, investors will be paying close attention to the comments on QE. So how much do you think that'll impact stocks today?
Well, everyone wants to see the minutes. A lot of people started putting emphasis back on the central bank when they saw what went on with Cyprus. You know, there is still some talk that Italy could be a problem, and now I'm hearing rumblings that Slovenia could be the next Cyprus. So, you know, everyone wants to know, is the Fed going to stay accommodative? What's the pace of purchase? Is it going to stay at 85 billion? How much longer? How long will rates stay low? Because the longer that rates stay low, the less opportunity people are going to have in the just say in their savings account. You have everyone out there, anyone in their savings account, they're not making money, and that's perhaps maybe why money started to rotate again, this time into mega cap tech that has a yield, that has liquidity, that has a lot of cash, so maybe some think of opportunities there.
Right. Well, money does continue to rotate. We talked yesterday about money rotating into food and beverage stocks and retail, and and even mega cap tech and stocks like Oracle, where dip buyers are coming in after the stocks gap down in late March.
Yeah, well, you know, again, entries and exits matter. This had a huge gap down, and it's been consolidating. The question is, you know, will people think Oracle is on sale based on the fact that, you know, there's a huge gap there? And with the state of where things are at in the market, you know, people are saying, okay, it's Oracle, it's a big name company, there's a lot of liquidity, they do have a yield, you know, so maybe there's opportunity. So you look at the chart, you know, I know traders were talking about, oh, look at this, huge gap down from the 36 area all the way down here. It's consolidated well, put in a higher low versus the low in March, and then yesterday went into the gap. So I think guys think there's opportunities to get in this thing. You know, first resistance would be 34 to 34.42, then perhaps closing the gap. So at this point, you know, there are some traders and investors saying, you know, I need to buy anything that, you know, has a bit of safety and a bit of yield and could, you know, have some price appreciation.
Right, and possibly speaking of stocks like that, Microsoft had a great day yesterday, big gain of almost 4%. It regained the support of all key moving averages and cleared some resistance levels. So it's pretty nice to see action like that in stocks like this.
Yes, and people are saying that, you know, the PC group is dead, but I think people are getting past that because they're not looking for growth. They're looking, like we said, yield, liquidity, you know, perception of cheap prices. And I'll say something a little different about Microsoft. I know Microsoft I've tried it a few times over the course of the past month based on the fact that I did think their Surface tablet was pretty good. You're seeing commercials everywhere about the compatibility of it. I know for me, I do have a Mac at home, I have an iPad and an iPhone, but I also had to buy a Toshiba run by Windows 8 in order to trade on it versus some other things. So I think that there are uses for it and it's getting some traction. You look at the chart here of Microsoft, and here finally a wide range bar for traders to love. This has been a choppy mess, but if you held it as an investor, it's been slowly trending higher to finally break out. So I think at this point, this type of igniting bar puts it in the game for higher prices. I would say, maybe try and look to buy it a little bit closer to 29, but if it were to take out yesterday's high today, I do think that this type of move now put it back in the cards for at least, 31.50 at some point, perhaps before earnings, perhaps after. But overall, I think there's a chance that Windows 8 will get some traction with some of its applications.
Now, what about Cisco, which gained 2% yesterday, was able to close the bearish gap from Friday? So where might we see it pick up some power?
This one's been, more of a chosen one. I remember last year it was considered a value play because it missed a few quarters and everyone was worried about public spending and where their business was going, and then they started to get back on track. If you look at the chart here real quickly of Cisco, this has been something that has given you some nice price appreciation. You've had two gaps. This was the first gap back in November that led to a nice igniting move. Here is another gap, in late December, which, it's been not a barn burner, but it's been, holding in okay. Look where it's come from. And then finally came in on Friday, held this gap again. That's why we look to see where prior gaps are, because it gives us indications of where you could trade against. Bounced up, and at this point, I think it's okay. It's not, I don't think it's super cheap, but I think that as long as they don't come out with anything disastrous, it could have the opportunity of taking out this 22 area and seeing higher prices at some point this year. A little bit different than your Oracle and your Microsoft.
Also a little bit different from them as Intel, which has been a laggard, but got a nice push yesterday, gaining 3.2%. Does it look like it can keep running?
This one I like. I like the chart. I like the channel. I know, again, the PC group's not the place to be, but after we saw what happened with Dell, where they tried to do the leverage buyout to unleash their cash and the value, I think we're going to start seeing something with some of these type of names. And I've been talking about that for a while, and finally they're starting to perk up. And if you look at Intel, they have a lot of cash. they give you a dividend, and right now you have a nice little channel here. Yes, you had a big day yesterday into resistance, so it might not bust through today, but I think with a bit of time, it's going to happen. Don't treat this maybe as a day trade. Treat this as a week or two trade where here you go. As long as it stays above 21.50, be long it, maybe add some, even though this might be the wrong price. But if it gets through 22, you're going to see it try and take back its 200 day. And if you look where Intel came from, this I think is cheap. And I know that it's in an area where the PC sector is dying, but they're trying to get into some of the handheld mobile devices. They're trying to differentiate themselves a little bit, and I do think down here where people need money to work, they're going to see some value. You see 23, and I think there is a small chance at some point this year it hits about 25.
All right, well, there's also money being rotated into pharmaceutical stocks. We're going to go in the trenches with those coming up, but first a quick commercial break.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with pharmaceutical stocks. On Monday, Scott, you noted that pharmaceutical stocks were acting well, and one that's really been on traders' radars is Regeneron Pharmaceuticals.
Yes, this one we talked about. We talked about the overall attention there, which it's been a stealth move for us because we don't really focus there. For others who trade these names, they've been rewarded. So we started looking at them, I think, late last week, early this week. And if you look at REGN, you'll see that it started to break above this downtrend, and that was your first opportunity. And then right around here is when we were looking at it again, around this 186. So some people have made some money with it. Some people are still in it. I think overall, little hard to initiate. This would have been, I would think, your core trade. Here was your add-on for cash flow. Up here, it's a little bit more of a trim and trail, but it goes to show you that there is activity in places. So if you're not in the right place, look for where the right place is, and this one has been one of them.
And CELG finished around the flat line yesterday, but it has been on the run. Are there still cash flow opportunities there right now?
This one I do think we can get that add-on trade. We talked about it at 100, 150, I don't know, maybe a month ago, and some guys caught a nice move there. You look at the reason why is because of this tight channel. Everyone knows that Red Dog loves channels, and this is one of them, especially after a move like you saw from this lower area. So you had a big move from here to there, digested, went again. You then even had another move right here for cash flow, and now it's getting tight. Some base on base moves are tough just because at some point it might give the other way. So I would say as long as it stays above this 114, I would say in motion above 118-ish, you'll get another trade. So this looks like it's trending really nicely with places to have a bit more size on, and then this could be one of those places. But again, when these things break out in higher levels, make sure they hold that higher level, because you only want to stay, if you're trading it for momentum, make sure momentum stays, and this has been a momentum name in this arena, and it's been working out pretty well for those holding it.
Clearly one to keep on your radar. Now, how much should ONXX Pharmaceuticals be on our radar? This has been climbing since finding support at its 21-day. Where might resistance be?
This one, the pattern looks good. If you're taking an overall look at it. With these, just to be honest, I don't know all of their fundamental stories, which I don't know the fundamental story about a lot of these farmers, and usually they're event-driven or news-driven, so just be careful if you're sitting in them and not just trading them. Here, you're coming back to these old highs. Technically, as I look at it, it's been acting pretty well. Here's your long-term support that it held. Then this is when it woke up above this small downtrend, pierced above a recent resistance, and then held above it, and now it's holding right around here. I would say above this 91, 91.50, you could see some type of wide range bar. So keep it on your radar, make sure there's volume, and make sure, if you're gonna hold these, know if there's any kind of conference, any kind of news that's on the docket, because these things, tend to move because of different types of data and whatnot. Right,
news events. ALXN Pharmaceuticals is one that's had a nice comeback off its lows. What do you think could really help it get back in motion?
I like this bull flag type pattern. There are two things that went on in this chart that I like. One, if you look at here from the bottom level, as it made a move, it pierced through resistance, and now it's holding higher. So it went through a lot of this past, just say noise, so to speak. So at this given point, the longer it stays above 97, I think I'd rather see you just wait and let it trigger above 100. If it gets above 100 and stays above 100, your first move will probably be back to this point, which is about 103, which is a nice day trade. And maybe there's more in the cards for that. But for me, I would say nice 2-day move, digestion, could go again, but it's got to get above 100 and stay above 100.
All right, time for some quick hits here, guys. Let's talk eBay hovering near highs. Where might a buyable spot be?
This thing has had a big move since its analyst day, holding higher, say above 56.80. It could see a move back to 2013 highs.
And Nike is hanging on to the top end of its current range. What level would you say marks a real breakout?
Well, it has broken out. Now the question is, it kind of continued. It had a big gap up on earnings. Yesterday it did get a little frisky, or actually the day before, and it's like right there. I'd love to see it get above 60.25 with some volume and stay above it. I think Mr. Kramer talked positively about it. I saw last night, so maybe that gives it a little extra power to break through. I am long it. I'd like to add, and then trim and trail.
And Google tried to rally yesterday after 4 down days in a row. What are the levels to watch?
This one got me good yesterday. It started off strong quickly, and then I wanted to see it get a second half move, which is the reason why traders are a little bit frustrated, because this was strong, and then it went to take out the morning high. It went up a quarter, a little quarter, and then fell down $5. So how good is that? Anyway, at this particular point, I guess if you're giving it more room, here's your new pivot low. This is yesterday's high here of 583.75. Above this 583.75, I do think you can get a move to about 790, but how it happens could definitely drive you to drink, and it's only Wednesday.
Don't start drinking just yet. Apple and Yahoo are making headlines after news that the companies plan to deepen their relationship on the new iPhone. How do you think this stands to affect both companies?
First of all, it could be 12 o'clock somewhere.
This is true. Not here, though.
Yes. Well, this news, it's interesting the time that this is coming out, because you have two stocks. It's like the tale of two stocks. One, Yahoo, a name way back when that came down, was battered, was bruised, couldn't do any right, and then it broke above 1660. Marissa's doing a great job there. You look at Yahoo, and this one has had a really nice trend. You have to remember the 1660 channel. The Red Dog loves channels. This is why it's stair-stepping higher all the way up here. Recently all you had to do is buy this at the 21-day moving average, and you could have made some nice money buying it here. There was your breakout. Buying it here. There was your breakout. Yesterday, guys in the chat room were talking about it, saying, "Oh, Yahoo looks good." I unfortunately did not buy it. And now it's opening at 2013 highs with this news. So I would say this is a spot probably to trim some, not to just initiate a new considering the size of the move. But if you've been holding this as one of your 2013 picks, which is what we listed in December, congratulations. As far as Apple, still hard to find a friend here. It's from the 700 peak all the way down to where we are now. Has had some tradable moves along the way. Last time it had a nice move above 435. That was really the last time I was enamored with it. And it worked out pretty well before failing at the 50-day. And now, the bulls will say, which they will, and I'm not a bull or bear right now in Apple, that this 419 now has a double bottom. And there it is at 419. And that if it takes out this high here of about 429, chances are it could try again to get back into the 440 range, which, earnings are within 2 weeks. Maybe it wants to do that. Okay, the bears will say if it turns back lower and breaks 419, you're going to be seeing a number closer to 400 before earnings. So at this point, there's just a lot of time with Apple. You have about, less than 2 weeks until earnings. It could be pushed around. Guys aren't really over trading this anymore, which I'm happy with. I know for me, I think I've traded it once or twice since it's failed at that 458. And as we get close to the earnings, maybe we'll put together some kind of options strategy for it. As of right now, I would just treat it as an active trade, and at some point, perhaps it'll change, and it just hasn't changed yet.
Well, First Solar changed. First Solar has a lot of friends right now. The stock beat its earnings estimate, saw a monster move of 45%, even gave the rest of its sector a bit of a lift. So these are heavily shorted names, though. So how much room to the upside might it still have?
Well, this also was, 100 plus stock, not even like maybe a year or so ago. So down to where it was because of the shorts on it, they got squeezed because people left this company for dead. I'm not saying it's back, and I'm not saying green power is shining bright, but yesterday there was a nice wide-range igniting bar that wound up closing near the highs. So at this point, I think it's down like $2.50. I would say watch this 35. Okay, this was an area that held in the afternoon. If it were to come to 35 and hold it, maybe you look to buy a dip. If it were to get back below 35, I think it negates the excitement of this move that caused a lot of short covering. So this is your line in the sand. If it does some work above 35 over the course of the next 2 sessions, perhaps it takes out yesterday's high and continues. So this will be on Raiders, Raiders and Traders headlines and some of the other stocks in the group that are also heavily shorted because, it makes them hear little footsteps that if this could happen to them, that, for solar shorts, it could happen to some of the others.
Right. All right. Well, we do have the Fed minutes out later today. Earnings picking up for the rest of the week. What are you focusing on today?
Well, I come in today, I think, with 5 or 6 longs and 1 short. Some of them are right longs, some of them aren't the right ones. Been trying to just rotate around like most traders out there. I've been trying to not be opinionated. Last Friday was a good spot to cover some shorts into support around 1538, 1539. Granted, I didn't with both hands start buying things because you never knew what this week would lead to. But then as this week's been progressing, there's been enough action in retail, the food stocks, the bounce back in the Russell and the transports and the financials. There's been enough things to do if you tactically maneuver in this range. If you're just pressing shorts, you're probably frustrated and you hate the stock market. If you're maneuvering, making some money, maybe leaving some money on the table, taking small paper cuts, that's probably what most traders are doing out there because it's been very hard to sink your teeth into things based on the fact that we have divergences everywhere, and that's just what's going on. That's the way the market is right now. Deal with it. Things will always change and get better, and sometimes you can't control what's not in your control. The only thing you can control is this thing. Is this the keyboard? Don't make it so stressful.
And that's your morning call for this Wednesday. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.